Good evening, everyone. Welcome to our webinar for the day, Elections 2017, a perspective on FKLI and investing. Uh, Myself, Lovely Sharma from Epic Research, I welcome each and every one of you to this webinar. Well, what a day started for the markets as a weekend. We have seen rise in geopolitical tensions again, and of course, not seen so good as an impact on equity markets. Well, this has been like fourth consecutive week from 28th of August when the first missile was tested, and since now we are in the grip of geopolitical tensions. So it will make more interesting to see things in a broader way, given the fact that we are having the elections as well, and then on the back of it, with that, we also have geopolitical tensions, North Korea, South Korea, and of course, if it's anything that is in Asia, it will impact a lot to other countries, and it will give some spillover effects, and that's what we have been witnessing for last 2 3 days. It has been very crucial for the market to sustain, and well, the sell-off we have seen not just domestically as well in Asian markets would have been important to note. Apart from that, we'll during this webinar look at various things. These things can be some economic indicators and charts. Well, I see a lot of people here and questions as well, so we'll start and I'll answer your questions by the end of this webinar. And well, these are some of the services we do render, so I'm not going to go into that. I'll be taking straight each and every one of you to the overall political cycles. Now, these political cycles, I hope many of you are into the market for a long time and might have heard the word political cycles and US political cycle and how it is being traded. There are strategies, there are algorithms that work specifically for these kind of markets. There can be some very important strategies and models which have been based on this very first, starting in 1975, which was very much accepted by the researchers and started off by Nordos. He started the first model and he concluded that political cycles and uh, given it's a democracy or how the markets react, and then the Republicans came in 1985. There was also some correlation and relationship between stock market and presidential elections. Now, now this particular slide, I'll be just taking this slide into consideration because it gives a broader perspective how the seats have increased, the government, the percentages, and how these percentages have been, So what I'd like to ask you to look at basically two, three important columns. First is the kind of percent vote, and we we as an trader, we as an analyst, we as an investor should solely be dependent on numbers. When I talk about elections, there are EQ and there is IQ, emotional quotient and intelligent quotient. So both of them come into play. And we talk about Malaysian general election, I mean 1955. I don't have that much data, but 1959, about 2 years after the independence from the British rule, Barisan National emerged as the winner, and of course, 74, and since then, uh, we have seen elections, and now we'll be heading towards the same. It has been the Barisan National, which has been winning, and going with the trend. I mean, everyone of you here understand the trend which has been set for a while, because it takes a lot to basically change a trend and that has been in place for 20, 30 years. Every round taking your emotional quotient out of market, out of your personality as a trader. We, at the end of the day, are happy with portfolio in green, and it is very important to build that kind of a portfolio. We can have a webinar on that as well. It's a nice idea, kind of a portfolio that we can make. But given the fact that as a trader, so we have numbers and something which has been in a trend, I would like to establish the fact here that it may go on, because it is very hard to change the trend, and there are a number of reasons. There can be interesting facts that will be put on the table and can be seen as a turnaround, uh, and can predict something out of the box which can be uh, uh, surprising. But there are points that we can look at. There are various points where we can look at, like games performance, SEA games performance, infrastructure developments, FDIs, how well the Malaysian economy is doing with China, and recent accord that has been established with United States. As far as ringgit is concerned, how that particular thing is performing. So once you are into the market, apart from your political bent of mind, we need to focus on the analytics and analytical bent of mind and see major data that has been. Now, prosperity at the end of the day is what everyone seeks into the life as a person, into the country, or in the family, or in the portfolio, and that should always bloom. So there are multiple things that we will be discussing. There are multiple data that we'll be looking at life, and then we'll progress towards FTFPM or KLCI, and how this particular election is going to change the overall scenario for last for next, I mean, 5 years, 4 years, we'll see. So if you have looked at the data which I pointed out during our conversation, that I want you to look at on this, and do you see anything interesting here? Um, well, of course, if you observe this particularly over here from last, I mean, 6 or 5, the average has increased of the percent vote. Now, even if you add up, okay, I'll do the math for you: 56, 54, 65, 56, 64, 52, almost 347, and we have 6 variables. So this gives you somewhat very close to 57.83. Now, why I said that you need to look at this important data, and why you have to understand the fact that I've put this slide is you can access it anywhere. It can be on any website. So average over here is 58. Now, what is the average and what was the last time? Do you see anything interesting? That the deviation in the last election from the average was way below. So we should be coming back and see some kind of a rebound into the market, or if you call it percent votes, I mean. And now let's come over here. Now we are very close to 50. I'm not good with handwriting and all. So 58, 41, 47, 35, 43.5, 36, 48. So where do we see ourselves in this column? Somewhat very close to 41.75, 42. And 58. So do you see anything interesting? The gap that is over here of almost 5 or 6, you can call it, is somewhat over here. Well, of course, is simple mathematics. So when we are very away from the average, we need to understand that we may be seeing it going back to the average. So you might see some kind of improvement in the voting percentage of the government, and a drop in the opposition, and the trend may continue. That is simple mathematics that one can do over here. Sorry, pardon me. Now, going forward, even if you look at these number and how these seats have increased, you'll find an interesting correlation and interesting analysis, and you'll be able to see that by yourself, that how the average of ruling party has actually increased with total number of seats. As the total number of seats has increased in last couple of decades, that is almost a change of 100%, right? You must see that seats have increased by the same number. So we must acknowledge the fact, going forward we are seeing somewhat the trend to be in place, and the percent of seats that is with existing and Barisan National, we may see sorry, some kind of improvement in the voting percentage. If you have any question, I would be enjoying a two-way discussion on this as well. So you can put your doubts here. We'll try to look only into the data and not with our political bent of mind. Of course, we as an individual have our own political uh, point, and we like to um, put it on the table and seek some kind of conversation on it. That is well and good. So this particular slide, I think, is understood. We've got two important numbers: averages, the increase in number of seats of the Barisan National, and the total seats that we have seen. So now let's come to some other facts and data, and how uh, markets are going to behave. Okay, let me resolve once, right. So this is, I get a quarterly chart of 50 PM KLCI, and now how the markets have uh, performed, and in last few years what has been. um Now I've just put on this chart, and to give you a perspective, and I might have my own data that I like to point out few studies that might help you to overall evaluate. Now, since this is somewhat in last 20-30 years, which we have seen over a period of time, uh, when the regime has been seen, and the elections have come, and after that how market is. So the political cycle, and the movement of the market are very much related. Um, this can be proved on um, data that one can accumulate over from 1959, and during the 20-day period, which I believe after election has been more volatile, way more volatile than as compared to pre-election periods. So one point you can note down here is that after election you may see a lot of deviation into the market, and this particular study is consistent with major previous researches and findings. It can be electoral factors, or it can be stock market volatility, whatever you name it. But post-election, the volatility tends to be very high, while pre-election, the 20 days period, the volatility is, or the movement is very low, because of course the investors try to adjust to the sentiments that are going to happen. Why it is important is because whoever is interested into the Malaysian stock market, it will give them a guide when to enter and when to exit. So now if anyone, any of you ask or see or have a conversation or understand the market, you can straight away come to a conclusion. Now this is based on last 50 years, I guess, at least from 1960. So you can say, or you can enter into the market. This will help you to create your portfolio. You can create before 20 days of pre-election. Now that can be time when the deviation will be very less. You see over here how the market has uh, been in a very small range as compared to overall movement over here. Now you look at this. This is a weekly chart. This was post pre-election. This is January, and suddenly, one, if investing into FKLCI, needs to understand that if you are going to build the portfolio, you should be avoiding the post 20-day period. Actually, it's a non-value that will be added to your portfolio, and you might pay up more to your broker or get trapped in those uh, pre or post election stocks or levels. As soon as the deviation on the volatility post 20-day elections are over, it will take a lot of time for market to actually settle down, decode, and absorb the elections. Further, uh, one can look at history back in 2008, or here 2008, 2004, 1990. So one can look at these point as every one of you should avoid this 2008 because it was a systematic risk, and whenever the election happens, it's not just on the day election happens and you go into the market and you buy the stocks where everything is discounted in the price. You see kind of a rally which is already in place. So like 99 or 2004, you see how they have been able to set the base. Well, of course 2008 was a whammy, and it did hurt a lot of portfolio, but that was the systematic risk and it was on the overall market. And over here back in 2013, you see how the base was created for a next leg of rally. Now During all this of analysis and all, we'll be looking at some important data first, and then we'll be going for some might be stocks that can perform well, or a couple of them which can actually give us a view for some stocks that can be added to the portfolio. Okay, so first and foremost is the kind of data you'll have to look at. Sorry, this one is a chart of Malaysia's consumer price index. It's over here. If you can look at from 1973 to August. Uh, it is at 3.7%. So, do you see any change in the trend, or first let us see how this particular index has been just doing? Every economy that has been there always needs some kind of an inflation into the market to make sure that there is a push and enough liquidity which can keep the balance of the supply and demand. So, this is 1 year and this is 2 year, and okay, it has been fairly well, all pretty much in the range from 5% and 4.2 to somewhat 1.2. That gives us an average of around 3.1. Fair enough. Now you see over here, 5 years still intact, still in the range, though slightly uh, trendy towards upward bias, because over a long term the drop has been very small, and see how your consumer price index has performed. So now look at 10 years. I think it is still much comfortable from almost 8.5% back in 2008. Who would want a CPI like that? Who would want an economy which has a way too higher? And actually, that was the case. That was, you know, an increase in overall here due to factors, and then again a drop, and it was at all time of 6.2 back in 1998. But the fact is, if you see overall last 10 years, people don't tend to have a data that can be factored in of more than 10-15 years. So it has been fairly conservative, and it has been fairly good. So that is one of the things, and we have seen a somewhat jump to 3.7, which was from 3.2. So that was largely contributed. So it's all over here. If you can look at mean 3.24, maximum it has been 3.8 in last few years. Standard deviation is 0.4. So with this, let's move on to other important factor that is for the economy and for the stock market. Stock market doesn't look at stock. Uh, Market as a whole look at the fundamentals that are driving the economy, and what are the things that has been factored in. I mean, as a mass, nobody would factor in what is Felda Global or what is uh, some stock is doing. You would look at basic fundamentals that are now. This is as far as the chart goes. 5 years Malaysia current account balance. Now it has been overall in a very tight range. It has been at around 9.6 billion in the second quarter of 2017, and we have seen an improvement from MYR, 3.08 billion uh, in the same quarter in the previous years. And the good thing is the surplus widened to MYR 27 billion from MYR 20 billion in quarter 2 2016. There was somewhat the deficit which was widened in services sector, and that was from MYR 3.78 to MYR 5 billion in 2016. But the current account in Malaysia is still averaged at around, I think, if I know it right, 15760 million till 2017, and it is reached an all-time high of around 39,980 Malaysian ringgit in 2008, and low of 978 in, of course, second quarter of 2013. So the point here is uh, the Malaysian current account balance is somewhat still in a much healthy position as compared to other Asian exchanges. The exports, okay, let me see. Yes, this is what I was looking for. Now this is Malaysia imports, I guess. Just a second. Current account, trade balance. Just a second. Exports, right. It is of just 2 years. Do you see anything interesting over here? A prosperity which I pointed out just in the starting of this webinar. One of the factors that leads an economy, I mean, Straits Times Index and FTFB and KLCI both have been very bullish, and at present we are seeing STI in a kind of a consolidation while we are still focusing on MY because we have an election. But if you look at this as a 1 year chart, do you see the sharp increase in Malaysia exports? These are total free on board and year to year change. This is monthly. Now if you look at this on a 5-year basis or on a 10-year basis, do you see how the activity has increased? We have been observing the same, and it is very much easy for me to say that Malaysia, KLCI has given an all-time breakout, and this is one of the bullish rally which shouldn't be missed. So I cannot just look at KLCI charts and look at all the MACD and things like that, all the indicators, and we can go on analysis because market as a whole doesn't discount the expectations of the people or the performance of a single or maybe largely 30 stocks, but those basically mass large stocks or heavyweights or the sectors are actually driven by the change in the internals of the economy, and that is one of the factors that is exports. Now you see from 2011, 2014 2015, we have been fairly in a range of 15 to somewhat -4. If you look at this, you see the jump over here in exports, the sharp increase from 2016 to 2017, hardly 5 months, October, November, December, and February, you have another data. How far was it from the pole? Way beyond. Has never been that far from any poll that has been in the past. You can look at the data, this is live and updated every second, despite the fact that it might come on 6th of October. But do you see anywhere deviation which has been more than the poll or estimates? No. Here suddenly increase was there. Then it came down and we are again seeing it. What if we reach to the level of 2010? Or let me put it this way, if we are towards this level, that will be an all-time high in last 20 years. Let us see a maximum chart. Do you see any cycle that is going to be there into the market? I can see simply the fact that the trend has been increasing, and this is Department of Statistics Malaysia. So what we have observed, that market is discounting the same, and here for your uh, perspective, right, you see the jump from last few 30.9. That is one of the reasons we have been very bullish. But as an trader or as an investor, uh, it becomes quite tough to survive the drawdowns, survive the ups and downs, and how you gonna play it, how you gonna. So first thing what you can infer, export oriented stocks are something which you should be having in your portfolio. I think it is simple to say that because we have seen an improvement uh, in the sentiment in the ringgit in general as compared to other uh, countries, and to look at solid fundamentals, we can look at only 5 or 6 economies: Mexico, South Korea, Malaysia, Indonesia, Philippines, and one factor that is going to maybe perform uh, well is the export oriented countries. So one can certainly look at some stock, or some stock that has been dependent on exports, and can be one of the big players because they tend to move very fast. I hope I'm audible. Right, just I want to show, right, just a second. So any stock that is focused on right exports may do well, and there are few stocks like Genting and all. But we'll be going into the very specific in coming webinars on which stocks can be added, and which export oriented catalyst or stocks can be in commerce or can be in any defensive play as well, which can bode well for coming time. I mean, uh, maybe Have Board, BHT or JCY International can be looked at. We'll see some charts of them, and okay, so this is industrial output. Well, I've seen this chart in just 1 year range, and now if you look at this chart of 1 year, we haven't seen industrial activity more than um, 7 6.2 odd percent. It was estimated to be at around somewhat similar levels, but it came at 7.3. And in last 2 years as well, we haven't seen that kind of a pickup, or a breach of somewhat 6.2. But if you look at the trend in very short term, very short term, uh, right over here. So the orange line is the actual. Now, if you look at last bottom, which was at around 1.9, just in last, I mean, this is industrial output, and when we're talking about industrial output, generally the lag time to see those signals into the economy or into the market can be discounted at previous levels. So when we were talking about market being very bearish, or um, so this is 2015, right? We were talking about, and okay, let's look at the charts. How the markets actually discount things. Now, going forward, this was the chart of industrial output. I think we were noticing on. So, just to give you a perspective of like almost like last 5 years, maybe, and the industrial activity in 2014 was at around 0.60, way too low. I mean, as from compared to almost 10.8. Now, this was back in 2013, and this was back in 2014. Now, you look at the chart, and you can analyze this from yourself. That's from 2013 2014, when there was a slide in industrial activity, till 2015, when we hit rock bottom in industrial activity. Do you see any correlation, or do you see any kind of you know movement which can indicate us? I mean, this was 2014 when we were at all-time low, and the market was suddenly at all-time high, and then we have seen, KLCI falling from 1800 all levels to 1500, a sharp cut of 30%. Now, from 2015, since it was all about fear and panic and depression and all, we have seen a smart move into the market. I mean, this is November 2015. You see the activity which was seen over here at 1.9. We have been seeing a kind of a trend which has been positive, right? And yeah, hope you can see. Right. So, okay, just for your information, like this was 2040, 50, 14, we were at all-time high of around 1890, 1850 levels, and then suddenly a drop into the market. Why? Because if you look at the industrial activity, which was at 2013, we came down to 2014, and of course, when the industrial activity was somewhat, I'm trying to pinpoint here the smartness of the market when we were at bottom again, and when we were having a lot of fear into the market at around 1.9 level, market was building a bottom at the same time in 2015. Now, if anybody would have missed this kind of a rally where they could have made a long-term portfolio in an economy that is giving 3%, 4% maximum returns in a bank, and getting a 30% return in less than 2 years, we'll be completing that. We have just completed that. So 30% return from 3% economy, or 3% returns banks or so, or fixed deposits or long-term government bonds. So that is something which one has to look at the market, and when we analyzed our exports data, I think right over here, we have seen improvement in uh, export oriented companies. So that's why I have asked to focus on export oriented company like Hive Board or JCY International, because they can give you an edge. Last, industrial exports, now that is import. Okay, now this is 2 year. Now look at the 10-year import cycle which has been there. There has been a suddenly jump in imports, and then we are again seeing a kind of a drop. But given the fact that we have already seen a kind of a increase in exports as well, so an economy that can do well basically on current account balance. Okay, I'll put out the max chart. It may do well given the fact that the political stability is there. All this data will be useless if there is no political stability. As soon as the political stability comes in and we are seeing the trade, the market may perform well. That's why when we started off this webinar, I said a few things like, SEA games performance, crude palm oil, largely depended on CPO, and good market performance and few improvement in infrastructure, spending with partnerships in China and US. That is what going to drive the market. Now coming to our basically the chart, and I have tried to point out the years here as well, and how the markets have given the return, and these have been the quarterly chart. This was in 1999, and this was in this was in 95, 90, 86. Same can be attributed to same can be attributed to the charts. Okay, now since I have mentioned two stocks, and let me put a perspective on KLCI, then we'll discuss two stocks for something to look upon after or post election. But remember that the historical study says that post election the volatility is very, very high. In last 40 years it has been high. You may not see that on any stock you are holding, but on a market it is very high. So pre-election it has been established that it is very very low, and I think that is one of the best time to take a position into the market. Now let's look at long-term chart. Anyway, uh, many of you know, MACD as one of the signals, or MACD as one of the indicators that do well, and when it is uh, giving a signal when the line comes from down, there is a positive crossover of short-term moving average with the longer-term moving average, and the signal line is breached. So how does this really work? Anybody traded on it? Anybody is trying to decode it? We can look further into it. But as far as the study says, let's look at weekly chart. I think this is perfect to see. And now let me just put a horizontal line. And if you see MACD over here, have you been able to analyze anything through MACD? No, because moving average convergence divergence is a very long-term indicator used for uh, a very long-term portfolio. Might be 10 years, 15 years. That is even shorter as compared to value investors who tend to hold things for maybe what, um, 25, 30 years. So this is one of the charts of KLCI, Bursa Malaysia, and used MACD as an indicator. Many of you might be using it and analyzing it. Now, the general analysis over here on a daily chart says, okay, there has been a buy signal here, then it came down, then it came up, and the volatility was very high. But in this small time frame, when there were 3 or 4 breach of signal line, we have seen market in a broad range of 794. So what do we see over here is this is somewhat will be interesting for you. So it takes away the noise. And since why I'm taking a monthly chart, because when you look at the market and you talk about election, you're not talking about like 1 or 2 month, 1 or 2 year, maybe next few years, and then you'll have to understand how the market will behave. So this pretty much shows that this market and how it is you know going to behave. So anybody reading MACD over here can look at the chart and understand, can put a comment. I'll be happy to uh, take forward and also share more insights. Okay, so MACD over here is basically nothing when the prices comes down. So what I would like to trying to point out is okay, we'll look at the how it has behaved in the past. It has came all the way from down, and then given a buy, and okay, I just moved the chart and the circle actually. So there was a signal over here, right? Then it again went down, and okay, let me just delete these 2 trend lines so you'll be able to see it. And yes, here you are. So it was again over here. How long this? Okay, there can be like 2002, 2004, 2 years, not a big deal. Market same position, 800, not a big deal. You cannot make any kind of a return in a market which is actually into a consolidation for 2 years and goes from 800 to 700 and 700 to 800. But anyway, The point over here is, do you see the longevity of this particular trade? Goes all the way to here, and market from 800 goes all the way to here. Maybe here, if you are smart enough and try to understand that when to book out, or as per your trading understand, or as per your return expectation. Of course, not the greed part or not the fear part, but what can be your stop loss or what can be your target? What is the kind of a return you're seeking? You're getting 3% from a long-term government bill or some safe investment, but you're getting almost 500, I mean, almost 60% return into the market. Not to point out that this was post dot-com bubble, of course, so that was a decline in the market, but we were above the previous low of 1998. So most markets actually in 2008, when 2002 declined, they actually hit rock bottom before beginning a rally. Of course, they hit a rock bottom, but Malaysian market was somewhat above its previous high of 1998. So you see over here, when other markets were falling in 2002, we were in a brief range of 850 to 700, and we survived there. We survived there for a long time. So from 2002 2003, there were two signals. So the point here is, it almost took 2003 to 2008, 5 years. Do you think this, the longevity of this signal? Are you with me? You can understand the kind of a return. I'll put it over here. 60%. No issues. We are out of the market. Again, you're into the market. 2 years. 2000. Sorry. 2008 to 2010, of course, there was some subprime crisis. Everyone was falling, so we need to fall down and we need to correlate with the market. But in this brief 2 years, even if it gave a signal almost here at 1250, it came down back to the trigger line over here, right? Fair enough. From 1200 to almost 1550. But in case you are still above it, and when you crossed over here, you were somewhere around 1800 levels. So let me just point the fact that from 1150 to 1800, or maybe 1700, or from 1000, or from 1300 to 1100, give away 5 to 10% to the market. That was what a portfolio creation requires. What was the time horizon? 5 years. Do you see over here? Now you see, because that has been pointed out. So 2 years of this, right? So that is what the market said. Now, even if 60% or not 60% in an economy which is giving 3 or 4% of return to us as an investor, as a trader, what should I look for? Where should I go? Of course, I'll go to the market. And why wouldn't I go to the market when your economic industrial output is up from 2015 bottom, 2014 bottom, and 2013 bottom? Secondly, when your current account deficit and the balance is fairly in a range which can give a government a comfortable position to improve the infrastructure spending, when you already have a consumer price inflation in a kind of a range in last 10 years, which has fallen from 8.5 and is at a stage of 3.7, this 3.7 is actually eating away all the returns that you're making from safe havens, safe havens as an investments that you have in safe assets. So okay, coming back, so this is 60%. This is 60%. Okay, we'll be modest. I don't want that to be greedy that much. I'll keep it 50%. I'll keep it. Okay, I have it enough. Keep it 50%. Is that a kind of an expectation which is way too high? But the market is giving that. I don't think it's a hand-drawn chart. It's what the market says, that you need to invest in me when there are signals, and you need to invest in me when there are political cycles, and you need to take out the best return. Now the best return takes 5 years over here. Let's not go into the stocks and uh, try to find out that one hidden gem, that one stock. And we could have had bought MQ Tech, which is now almost up by 70-75% in last 2 weeks. But let's not go into the stocks. Let's not find that one stock that will change your life or change your financial uh, you know condition, or that will change your whole financial world, or improve your balance sheet as a trader, as an investor. You uh, don't want to go to the stocks. Let invest, buy one share every month of the components of KLCI or the top 30 stocks. As simple as that. That what you, to put it in a simpler term, that's what would I would do. From here in 2010, not even here, we're not trying to pinpoint the bottom that yes, I'm one of the people who bought KLCI at 1000. No, I'm not that smart. But I need to be smart when the market is actually giving me a signal, right? 5 years, 50-60%. Now, okay, we ended here. Do you see anything? Yes, the market is giving a positive signal. How many times have market given a positive signal in last, this is 20 years chart? Anyone? You can post in the comments. Uh, okay, this was one. This was one. Okay, I'm not getting any signal on quarterly chart. Fair enough. Monthly charts. Any signals over here? Of course. So the point I'm trying to make over here is, of course, a lot of time on FKLCI. The point I'm trying to take over here is something. If you're looking for a very short-term gain, try to look at the larger picture, try to look at the bigger picture, and understand what your investment can be in next 5 years. I'm talking about brief 5 years, maybe 2022. So we are getting already one signal here. Now this is one signal is enough for me. This over here was enough for me to enter into the market. This was the point first. This was point 2, and this is point 3. As simple as that. So what do I do in this market? Okay, I'm gonna remove the drawings here. Then we'll move on to two stocks, and then we'll end this webinar. I'll be taking your questions on any stocks if you would like to know, but we'll be discussing two stocks, and then we'll have a happy weekend. Okay, so let me remove all the drawings over here. Now, since the long-term trend is up, and anyone who is looking into the market can understand why I'm drawing these lines and what does they indicate. And now there can be some retest of 1730, 1740. Anybody who's looking to create a portfolio, understand that 1710, 1730 is the zone where they can buy good value in stocks, and try to look at market for next 5 years, and can of course see a bump of around what 50 points. That's almost 3-4% here. The volatility, as I've pointed out earlier, post election 20 days the volatility is higher, and um, post that, after 20 days of elections, we may see some easiness, and market may react and absorb uh, uh, you know to all the data that has been coming into. Okay, now a few stocks which I have talked about. This was FTFBM KLCI. Okay, doesn't look good, does it? Okay, just hold on. Let me open up. Sorry. Okay. So, first and foremost is one of the stocks that has been flavor of the street for last maybe a couple of trading sessions, couple of days, and has been doing fairly rebound in the prices is Filter Global. Why? Because I still believe that this company actually has something very close to the government as well, and it has very strong presence in specifically party related to Barisan National, and it has been facing some problem in the lands and palm trees, which has resulted into the drop in the profit. But I still believe that at present the stock technically, sorry, looks to rebound and perform well in coming sessions. First is, and most important is, the trend has changed over here. The trend was pretty much, anyone who is observing the market and know the basic Dow theory, in a very short term span of time, the trend which has been down for last few month, with a lower top, lower bottom formation. We have seen a kind of a double bottom formation over here, and this is one of the pivotal supports that the stock has seen a risen to all the way from 2.1 or 2.2 odd levels, and we have seen this particular support to be held into the market. Of course, we also have the long term supports that are coming over here. If you look at the chart overall, we still believe that the downtrend which was there for the market and all the drop which was seen in the profit due to maturing land and palm trees problems this company was facing, we believe that the post consolidation there may be improvement, and the strategy which this particular group is focusing right now is for operational excellence and some kind of rationalization for the organization, and focusing on some selective external growth as well. So I believe at present the risk reward is also good. Anybody who's looking to go long into any stock for a very short period of time, it is actually Felda Global, one can look at, and this stock may see some kind of a rebound to first 1.95 and 2.2. We still have a very long-term analysis of this chart on a very long-term portfolio-wise. It still looks good because after a brief consolidation of downward move, this stock has come down to consolidation. So generally, when there are consolidations on the charts, it means that there has been a change in the strategy of the business, that the underlying fundamentals and internals are doing. And given the fact that this is very closely associated with Barison National and certain other facts, so we believe that this whole process is now paving its way for the short-term bulls. And of course, once this stock goes above somewhat one two 2.08 ringgit, which is our short-term target. Above that, we still believe that this particular stock can look for somewhat three, but that will be way too aggressive. And uh, long term, I mean, anybody who's having a next 5 years view, that is one of my disclaimer over here. 5 years view is very important. Short term, I think 2 to 2.05 ringgit. One of the stock is the Xeon Holding, and it's a penny stock. A lot of activity has been seen into this stock, and I'll be adding volume because since it's a penny stock, the volume participation needs to be there. Right. I'm gonna do you black. Black looks good for volume. Right. Now this is one of the penny stocks that we've been tracking, and one point of time it was at 5.29, and then suddenly all dropped. There's no fundamental in this stock. It's based on purely technical analysis, and you'll get to know why this stock is being selected. I hope anybody who's into the market or understands technical analysis can understand why. It has breached a long-term resistance on the monthly chart. Of course, quarterly chart you cannot look at kind of structure it is as, because that's not satisfies the overall technical view. But we are not here for investment of next 20 years. We are here to invest maybe next few weeks or maybe months. But this one of the penny counters is still looking attractive, and I believe that anybody who's looking to invest into uh, penny stocks can look at Vision. Once this stock breaches the 0.165, 0.160 mark and closes above it, I still believe that it has a long way to go to 0.220 and 0.210. And those are the levels for this stock to be looked at. Okay, now coming on to our next stock. Why I'm having this is because I've given some kind of a data specifically related to the uh, infrastructure, exports, manufacturing, and industrial output. And secondly, I think that going forward, crude oil and energy may perform well. So anybody or any stock that is having a venture or associations into oil and gas sector, this has taken an accusation of Samudra Oil Services from last year, and I still think that going forward, Destiny is looking good because the chart structure doesn't seem so well. So here I'll be playing with levels, and that's what you'll be able to understand with. Now there was some. Okay, I'll be putting it into simple line chart because you can see the gap over here. Right. So starting from here, do you see the higher top, higher bottom formation is still in place? Now, I still think that going forward, Destiny has a very strong supports at 0.55, 0.54, and if these levels are sustained, now coming back to candlesticks, okay, if these levels are sustained, we are to be believed that this stock may rebound, and once it goes above 0.620, we can see a rebound in this stock to 0.740 and 0.830. Though the overall long term scenario for the stock is positive, and we are still in a buy mode from our signal as well, so there is some kind of a profit booking, and there is some weakness on the stock, but going forward, we still think that post election, now this is just from an election point of view, post election, uh, Destiny may perform well given the fact that it has its political uh, relations and connections. So going forward, Destiny post-election may perform well. All the points at this point of time looks to be weak, but remember two levels which I gave 0.540 and 0.620, which has to be looked out. And once above 0.620, I think going forward with rise in a crude oil from 53, we have a very bullish and long-term high targets for crude oil as well. So oil and gas space is going also to contribute. It has made some recent breakthrough in its rail industry, and also secured few contracts in the transport ministry. So when there is a change in the uh, industrial and infrastructure activity, we believe that this stock may do well, and certainly uh, once above 0.620, we may see a rebound for 0.710 to 0.780. Now, these are some of the short-term picks. Basically, these are into context with the the election in sight, and we may have a stock that can do well in longer term, which can be added for might be 5 years point of time. Filter Global is one of the stocks which I do have suggested, and that shall be looked at. Now, from your insights, let's look at crude palm oil, because many of the traders I still believe are trading in crude palm oil as well. There you go. They already have a kind of analysis done. I think that was the previous analysis. I think it did well somewhat from 2700 to 2890. Very nice. Okay, so now you can clearly look at this formation, so you know your levels, and 2700 is the level to watch out in crude palm oil. 2700 to maybe 2650, but more likely is that 2700 is the point of inflection, and we may see this level to be very supportive in nature, though the trend is overall higher top, higher in bottom. So this is one of the higher bottoms that has been in place. Now this can go on as a top, and okay, so 1, 2, 3, 4. You can understand where we are going to see prices of crude palm oil in coming time. So you must be prepared for any bullish run in crude palm oil at low levels. I mean, these are not the levels to be at the sell side. And if you are very attentive, uh, listening to me, you might yourself have put out that a buy is already generated. Do I need to say anything? I don't think. It is pretty much clear from the chart itself that what we are trying to figure out in crude palm oil. So any questions on crude palm oil as well, I'll be happy to answer. And don't be surprised to see this maybe in a year or two by 3,200, 3,100. That's my personal view, and of course the study says that, but that doesn't make you go out and buy crude oil. That's just a study and may do well for anyone who's seeking to invest in crude palm oil related stocks. So that is one of the clues that I can leave with. And I'll be putting an end to this webinar. If you have any questions, I'll be happy to answer. You can reach me at lsharma@epicresearch.sg, or you can reach us at info@epicresearch.in, and I'll be happy to answer your queries. If you have any queries, you can please post them here. And okay, there are very much. So any queries, I'll be happy to help and answer. Well, sure, I'll share the presentation file, Mr. Subramaniam, and of course, you'll be getting somewhat an insight on Anzo. Let me look at the chart, and I will. Oh, see any I think there are better stocks in case if you're holding. I think this is a one-sided move. I mean, there has been no. See, these stocks like this, they don't generally give you the kind of. There has to be a broader consolidation. So it has just been into consolidation for last 3 or 4 months. So there has to be much more consolidation. Anzo still looks weak. Any bounce, people who are trapped over here will try to exit, and then only the fresh money will come in. I mean, the fresh money will only come in when the existing traps are open, and there are exits for long, investors who are trapped on the upside. But I still believe the stocks look technically oversold. Any short-term pullback should be till 1.40, 0.140, 0.150 maximum. I think that is the answer. Well, there are many stocks in Malaysia that are into. I don't think I have to point out, uh, but many stocks from Malaysia that are doing good, and they do good when hibiscus is one of the stocks you can look at. Hibiscus may perform well. Uh, One of the stocks, many counters, which I can discuss, but I'll keep it to you. So one can look at hibiscus as a stock, right? And I'll be sharing the presentation. I think we have a time limit as well, and since it's a weekend, I think I'll take your leave. In case any more questions, you can drop your query at lsharma@epicresearch.sg, and I'll be happy to answer. So that is me, Lovely Sharma from Epic Research, and hope you have a happy weekend and happy investing.